Well, good day, everyone. David Paul speaking. It's about 10:30 here on Tuesday, the 18th of May, and I'm recording this video. You're going to get this in your inbox on Saturday, the 22nd of May. So I'm looking at the front page of VectorVest UK. This may change and will change quite a bit by the time you get this video, but as I'm recording this to meet a deadline on the 18th of May, the primary wave or the short-term trend on VectorVest is down. Underlying trend is still up, and the longest measure of the trend on VectorVest, a confirmed call, is up. So we've got a mixed situation. However, the short-term trend is down, and we've printed a red light on the color guard, which means that the price is down day over day and week over week. And as you can see, this has been followed by quite a few red signals. The short-term trend of the London market has been in fact down for the last couple of weeks. I think there was one day where it stuck its head up in the last 2 weeks. You may also see a little black star in the red light, and that means that the price is down day over day and week over week, and momentum is also gaining to the downside. So as a result of that, the advice on the front page of VectorVest is VectorVest does not advocate buying stocks at this time. I think that's very good advice. Let's hope that's changed quite a bit by the time you get this on Saturday morning. So short-term trend is down, and down with a great deal of momentum. Underlying measures of the market still positive. So let's actually have a look at the market itself. I think I've got it open. There we are. That's the VectorVest composite, which our market timing signals are measured on. It's a equally weighted index of all of the 2,000 shares that we follow on the London market. If I go back to the start of the sell-off, the COVID sell-off last year, and go down to the bottom here, I've just got a chart of the pure price, nothing else on it. This little drop down speaks about all the VectorVest market timing systems, of which confirmed calls are the longest term measure of the trend, and the confirmed call is nothing more than the underlying trend confirmed by 2 weeks price action. And if I click on confirmed calls, it'll populate the chart, and as you can see, this red triangle marked the sell-off last February, and that was a great signal. Then April the 27th, we got our longest measure of the trend, said the trend has turned to up. Bit of a speed wobble here in November, and then from the 11th of November until now, the longest term measure of the trend is up. But as you can see, over the last couple of weeks, the short term trend has been down, and VectorVest is advising that we sit in our hands, don't buy any stocks onto the short-term measure of the trend, we hope, rejoins the longer-term measure of the trend in an upward direction. I'm still very positive, but I tend to be overly positive, as many of you will know. Now, it's not necessary to know how these darn things are actually constructed, but it is useful, I suppose, and gives us confidence to take the signals. If I click on VectorVest market timing layout, it then adds some of the VectorVest metrics to this, and the two most important are the MTI and the buy-sell ratio. So let me start with the MTI. There's the MTI, and I'll make it a darker color so we can see it. So you can fiddle around with this, folks, and make it whatever color gets you all excited. The MTI is a composite indicator which in fact measures the momentum, the speed of the VectorVest composite, and the speed of the buy-sell ratio, all rolled into one. Now the buy-sell ratio is a index of the shares that are on a VectorVest buy divided by a VectorVest sell. It's a measure of the breadth of the market. So the MTI is a composite indicator that puts together the momentum of the price and the momentum of the breadth of the market into one line study. It is graduated between 0 and 2, and if the MTI is above 1, folks, that means the underlying trend is up. And if the market has risen for 2 5-day periods in a row and the MTI is above 1, we print one of these green triangles. And as you can see, the MTI is above 1, and that means that the underlying trend is still up. And for the underlying trend to turn down, as it did here for a couple of weeks in October, November, the MTI must go down below 1, and the market must sell off for 2 5-day periods in a row. And as it did that here, it printed a red light. As you can see, the MTI went down below 1 here, but it didn't sell off for those 2 5-day periods in a row, and thus there was no red light printed. So what the study does, and what the confirm calls do beautifully, is that they ignore a great deal of the noise and keep us in sync with the overall trend of the marketplace. They and as you can see, it gave us an exceptionally good signal here, and a very robust signal here. Ignore this bit of noise, and it really says at the minute all of this means nothing at all. So in the positions that I've got, folks, I'm holding. I'm fully invested in the UK market. Got a little bit of cash, but nothing worth. I will consider buying some more stocks if I can muster the cash, if and when the short-term trend on VectorVest turns back to up. So just remember what we want to try and do. We want to buy undervalued shares with great growth fundamentals that are rising in price when the general market is rising in price. And at the moment, the general market, the big trend, the underlying trend, and our confirmed calls are saying yes, but the short-term trend is in fact pointing the other way. Until that changes, then do your best to sit on your hands and do nothing. That's certainly what I'm going to do. Okay. So if we now have a look at the first thing we have to make a decision upon, folks, is the direction of the UK market, and I've covered that. We then want to look at shares with great fundamentals, and if I go to the stock viewer itself, and in the essay I've talked about RV and RS, and Sylvania Platinum is a good one to illustrate this on. As you can see, the share is at 138. We believe it's worth 277, so it's undervalued. The RV is a whopping 1.84. The RS 1.32. Now on a scale between 0 and 2, these are great numbers. So this share has got that combination that I'm looking for, which is that ability to grow earnings strongly RV and safely RS. RT is a respectable 1.27, and the VST is the third or fourth highest in the pack. CI measures the long-term trend. I didn't talk about that in the essay, but it measures the long-term trend. This is in fact showing that the long-term trend is outstanding. It's on a buy recommendation, and to size your position, if and when the short-term the trend of the London market should turn back up to up, then the stop loss is at 123. Also use the VectorVest stop loss as a trailing stop loss in your positions. Should grow earnings at 42% next year. So if I have a look at the chart now, and I pull up the chart, this illustrates those three moving averages that I talked about in the essay. That's the last bow tie, somewhere down around here, folks, where all the moving averages in fact crossed. And that was at about 47 pence. That's where I bought into it, just there. And as you can see, it went to a VectorVest buy recommendation at the pretty much the same time, so both techniques saying the same thing. But the beauty of the moving averages is that it gives us this zone. This zone between the 21 and the 55 is a very, very important place where markets like to actually pull back and find some support in an uptrend. And it pulled right back here and now seems to be moving strongly up again. So I've been using this bow tie methodology of defining trends in 3 time frames, and over the years I've sort of standardized on a 21 period exponentially smooth moving average, a 55 period exponentially smooth moving average, and an 89 period simple moving average. Now that's a daily chart, so a period means a day. However, if I was trading an hourly chart, I would use the same moving averages, except that they would in fact default to an hourly bar, not a daily bar. And in exactly the same way, so a very strong measure of the trend, visual in your face. The little blue line, that's the VectorVest trailing stop loss, and you see how it's done such a cracking job in ignoring all this noise, saying this little noise just doesn't matter that much. Do your best to stick in with the trend. Okay, so at the moment the VectorVest stop loss is down around here, pretty much sitting on top of the 55-day exponentially smooth moving average, although its derivation is completely different. The VectorVest stop loss is in fact adjusted for the fundamentals of the share, where it gives shares with great fundamentals a little bit more room to move. So it does a really good job in keeping us in winning positions, placing the stop loss well out of the traffic. If your stop loss is too tight at obvious places, I assure you they'll be picked off, as was the case here. You see under that low, let me break this up a little bit. Without a doubt, that tail, this went down and nailed all the stops that were underneath here and down around here. Okay, there'd been a host of stops sitting down around there. Market went down. It doesn't even have to get down and take out the low. With the spread, it'll nail these people down here. Pretty much everybody was sure that this was going to go up, and in the dealing floors of the city, they would have said to themselves, well, how can we get ourselves and our best clients in at a good price? And they know that the stops will all be sitting down underneath these major lows. It's only if it's bid down here, it only takes one person to weaken and the market will go to the bid and all these stops will get flooded. So happens all the time. I did it myself for years to get good clients in at good prices. 21, 55 and 89 does a good job in keeping you in the trend, and defines a very strong buy-in position on a pullback. If you add the stochastic to the mix, that will actually refine your entry signals a little bit better. But to put the wind at our back, folks, the first thing, 70% of the exercise is the overall market. Is the overall market rising? And we want the short-term trend and the longer-term trend to be pointing upwards. We want to be involved in shares with very strong growth fundamentals, safe, and that's that mixture of RV and RS. And then of course the share itself must be pointing in the same direction. Undervalued stocks that are rising in price on VectorVest buy recommendations when the general market is rising in price. Nobody knows what's going to happen next on a trade-by-trade basis, but if you tick those three boxes, you've put a very, very strong wind at your back, and you've engineered the probabilities in your favor. You've built a very, very strong edge in markets that absolutely cannot be achieved in any other way. Thanks very much indeed. Bye bye.